Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is Thursday morning, February 4th, 2021. If you find these videos helpful, definitely click down and subscribe this way you can get updates, and we also throw some educational videos in there too. If you have comments about anything that we discussed in the video, definitely leave it below the video and I'll get back to you as soon as I can. Well, the Qs, the QQQ kissed, came very close to all-time highs yesterday. The SPY testing some highs, but the market is not really feeling ragingly strong the way it did in January. There's a very big difference between the markets trading now and how it did for the first 3 weeks of January, I guess I would say, prior to the FOMC announcement. So really what I want to start today's video out with is if you are finding that it's a little bit hard to see those bigger winners right now, if you feel like you're kind of going back and forth, that's the tape that we have right now. But what does that mean? And when I say that's the tape that we have right now, we're not seeing broad sectors or broad market follow through. It's kind of where every day you have to be on top of the right stocks. Every week for your swing trade, you have to be on top of the right stocks, which means there's a little bit less margin for error because we don't have that big wind behind your back right now, where no matter where you get into a trade, the market's carrying you up towards what might be your profit target. So what does that mean? What does that actually mean as far as putting on trades? There's thousands of people right now, maybe more than that, online talking about buy this stock, buy this stock, buy this stock, but hardly anybody's talking actually about trade management. And that is really the number one thing that needs to be focused on right now. In my personal trading, because the tape has changed, I've reduced share size. I've reduced my exposure because the market's not as clear. We're actually seeing, even though we're rallying right now, we're rallying on kind of some oddball stocks. We're not really rallying on what might call market leaders. You can almost feel like the market's like hungry for like those guys to wake back up and make us feel more confident. So that means that we really need to get entries as close as we can to the optimal entry, not buy too far past that optimal entry where the reward, let's say this is a perfect trade where you have plenty of reward in exchange for the risk. If the stock has already traveled 2 or 3 days, and if it's a swing trade and 50% of the profit potential is out of that trade already, you have to do one or two things. You either have to pass on the trade because the reward is not there for the risk, or you can take the trade with significantly less risk, which means you have to adjust how you get into those trades. So you gotta be honest with you, trading is a lot more than just say buy now, buy now, buy now. There's trade management, there's share size management, there's position sizing management. And that's really what separates somebody who's just screaming buy now or calling out chart patterns from somebody who actually, like myself, who actually trades. So if you want to get all of this from me personally in real time, look to consider getting into the boot camp. It's $295 for 30 days. You get everything, including my course, my education, my real-time coaching. If you're struggling right now, it's definitely something to take a look at. What we're going to do now is we're going to go into some individual stocks. And like everything that we've been doing pretty much for the last 2 weeks has been either setting up trades for our watch list that have spiked and waiting for them to pause, or initiating new trades into new optimal entries. The marijuana stocks, the CGCs, Tilrays, those kind of stocks right now had a really nice explosion and now seem to be kind of petering out a little bit. So if you have a good swing trade profit, we have our targets up there. We're going to give it one more day, maybe, to see if we get some follow through. As long as we're well bid, we'll continue to hold them. But if we start to see below the open, if we start to see lower lows, lower highs, then we'll move up our trailing stop. Again, remember, there's a lot of choices of what you can watch here on social media. Start to really learn the difference between chart reading and becoming a trader. And a trader means that you're managing risk, you're managing share size, you're managing expectations based on what's available. It sounds nice that you want to make, X amount of dollars per day, but some days the market's tough and we're in capital preservation mode. That's really what it means to have a long, steady, growing trading account. We're going to talk about Apple today. We're going to talk about SAVA, SAVA. It's been a pretty active stock in the community. A little different reason from what GameStop was doing, but we'll take a look. It's actually exploding. No other way to put it. But we're going to actually start out with PayPal. PayPal after earnings and how to trade PayPal. If you're a regular subscriber to the channel, which I hope you are, You'll know that we called out PayPal at 244. That was our breakout level. Earnings came out yesterday, gapped up. It's in 264, I believe, right now. So what we're looking to do is get one more day out of this. We're looking to get the sell the news coming out today. So when I say one more day, we're looking for it to open higher today off of the earnings from yesterday, push higher, and then move up the trailing stock to lock in that $20 to $25 worth of profit that you have. A lot of the stocks, including Goldman Sachs and financials, had really good blowout earnings, but they rallied prior to the earnings and then sold off for about 2 weeks. They found some buying yesterday. Hopefully you looked at those yesterday. We called them out. And again, this is really where when you understand order flow and you understand tape reading, a lot of what we're talking about right now, it's simple, but you need to really dig in and have this in your trading plan, which is adjusting share size and what you can expect to get out of the trade, and when it's right to be booking profits, when it's right to be moving up your trailing stop, and when to do nothing, quite honestly. Again, so if you want to join us, if you like just being on social media here with us, that's fine. Click subscribe. I'd love to have you here. But if you want to take it a little bit deeper, definitely click down and learn about the boot camp. It's only 30 days, but it's a lot for 30 days. You get everything plus the kitchen sink, but that's a good thing. You'd rather have more and be blown away by everything that you get. So let's turn over to the charts. I'm going to show you what I mean about the SPY and the Q, and then we're going to get into Apple because Apple's interesting. We've had a few members want to trade Apple. We had a couple of good successful call outs about a week and a half ago. But there was something going on. They said, no, I know it's Apple. I know you want to get involved. I know it just pulled back, but there were clues. This is, again, tape reading. This is really learning how to be a trader. And I'm going to point out what those clues are on the charts now. So let's head on over. We'll start out first looking at the SPY. SPY was struggling at the previous day's high. It looks like we're going to get back up to that level. Again, you might be able to see this a little cleaner on hourly charts. And you can see here, it got above the 2-day high and pulled back pretty hard. And now we're actually going to open up within yesterday's trading range right here, which is basically where we were struggling yesterday. The Q is a little bit different. Drilling down deeper, we actually did rally up and hit those new levels, but then we're reversed. We reversed hard again, and we haven't been able to hold it. So we're starting to see rallies, but we're not seeing that same market internal. We're not seeing the same price action that just makes you want to get in there and say, yeah, it doesn't matter what I buy right now. We're going to start heading in that direction. And PayPal is the one I want to start out with. Give you some visual detail now of the ideas. And essentially PayPal here, you can see if you're a regular viewer of the channel, when we pulled back here with the FOMC, we had 244 as a level, failed over here, got above it, pulled back quickly, and we were looking for it to go above 244 and hold that bid. Earnings came out, it's up 5%. It's trading up around 265 right now. So if you took the trade that we called out and you got long at 244, you're sitting on $24 right now, 20, 20, 22, 20, 21 to $24, depending on where you got in. So what we're looking for today is for the higher opening, a push higher, and then as it pushes higher, we're looking for profit taking off of this bigger move. Now, long term, we're not talking about investing. We're talking about booking that $20. It's real money, right? Apple, I want let's start out with SAVA. SAVA is one that's been in the news, just incredible news right now. Again, we don't want to get deeper into the news because it's medical. I don't want to profess anything along those lines, but it's Alzheimer's and amazing. But here's the clues. Again, if you want to really start drilling in a little deeper, you start to see volume spikes before the stock starts to move. And this is recent. This isn't years ago. This is recent, especially over here in January, where the stock does 10 times what it normally does. It starts to leave clues, right? This is really the part of becoming a real trader, a trader who really does the homework. You start to position yourself here. Now, it's been a little bit easier to trade as a day trade. Just to give you some idea, you can see that there were plenty of optimal entries yesterday, plenty of opportunity to manage the downside in the direction of this move higher. If you're looking to trade it as a swing trade, you can see it's actually up another 41%. I'm day trading it now. I am not looking for a new swing trade. It's hard to justify, regardless of the news. How do you manage the downside risk on something that's up 100-something%, if not more, probably a lot more than that at this point, in just a couple of days? Actively trading it, absolutely. If the stock pauses for maybe a couple of days, maybe look to initiate a swing trade and get to the upside, that's fine. But if you're an active trader, this should absolutely be something that you're watching, even if the volatility is too much, should be something that you're learning from because of the price activity, and you're getting to know your signals, you're getting to know order flow, you're getting to learn how to read the tape, and then you start to set your risk reward levels to set up some trades. Apple, here's the deal with Apple. Obviously news yesterday talking about a deal with Kia Motors, $3.6 billion. That's a pretty big number. I don't care what, we throw numbers around like they're nothing today, but 3.6 billion. It's been talk about the Apple car, the autonomous car. It's out there. This is really big. But here's what I want to point out about Apple. Okay, we had the trade. We had 138 here as our first level. That was the first profit taken. Got long again over here, and we said the first pause over 138 was our next long, looking for 150. So what happened? Earnings came out, the stock sold off. Earnings were actually pretty good, but let's look a little deeper into why I was suggesting not to be involved with Apple yet. Since earnings, we had 1, 2, 3, 4, 5, 6, 7, 8. Okay, so right into earnings and after earnings, we have 8 trading days. Out of those 8 trading days, we had 1, 2, 3, 4 days of heavier selling. And then 1, 2, 3, 4 days of what we call melted candlesticks, which is indecision. So 8 days, 4 days of indecision, and 4 days of heavier selling. Without a well bid day, without a strong day closing near the highs. Okay? Nothing's going on in this stock. It's other than what just happened yesterday. Until that happened, you as a trader who's looking to accept risk needs to accept risk when it's obvious, when smart money has already made a commitment, when you are looking to piggyback on what the smart money is already committing. That's not happening here yet. Today is interesting. That's for sure. It's going to open up just above the recent 4-day high. That's a level to keep an eye on. So somewhere above 136, 137, in that area where we start to look for an entry, maybe fine tune the entry a little bit on lower time frames. But now something has happened. If you're trading at the last 8 days, there's nothing going on. And this is really where money is going to die as an active trader, just simply because you're not paying attention. Now it's starting to get a little interesting. If we go well bid today, if we hold above the open, if we close near the highs, Apple has now woke up and maybe the story has a little bit better news, and maybe it has legs to start looking at that 150 that we were looking at before. Okay, so pretty interesting trades there. OSTK, if you're in our community right now, this trade was really interesting trade yesterday. We had our profit target out there. We had our standard 3-to-1 profit target. It exceeded it by a mile yesterday. Again, if you don't happen to day trade, this is what we were looking at yesterday. Did get stopped out on an early entry. A lot of members re-entered after that fact. And looking to hold this as a swing trade. 100 is the next level. 88 was a big level we were looking to clear. The stock was in the doghouse for a long time. It got about a 60% haircut over here, kind of meandered around, and now it's back in play. If you remember, 2 days ago, we called out that this bullish U-turn was interesting. Start to look for that as a new trade to the long side, and rewarded yesterday, looking for one more day higher. ZI, again, you can start to see that we're looking at we're not exactly looking at Facebook and all of the popular stocks you might be thinking about. But now this is interesting. We've had 52 as a level that we needed to get through. And now what's significant here is it finally did go well bid. It finally did close near the highs. And now it's got room to run, hopefully up into that 64 level. So what do you do now? Because it's further past the optimal entry, which was 52. This is what I meant before. You start to shrink a little bit on the profit potential, but it's still an obvious trade. So you just have to put less money into the deal and work the trade a little bit more, looking for new all-time highs here. So this one's set up pretty good as well. To throw a little curveball out there, Las Vegas Sands, I'm actually looking to short sell this stock today after this rally. After roughly 6 weeks of selling, we got a couple of days of buying. This fits the criteria of what we call a saturation play. So I'm now looking for the stock to open higher, push higher, and then look for a sell short. A little bit of an aggressive trade there if you happen to be a good experienced trader. FUV, hopefully you took advantage of this yesterday. We said it popped, finally went well bid through that level. 24 is the level coming out of, as you can see, the optimal entry. Got paid yesterday, really good follow through. And now we're just looking for a couple of more days. So I really pointed this one out so that you really need to understand when we start to call optimal entry, those are the prices that make the most sense from a reward perspective as well as risk. SKLZ, oh, excuse me, typing that in wrong. SKLZ, same thing. You can notice the optimal entry here, well bid into another day of well bid. So what happens now? It's a little further past that level, further past the breakout. So again, still plenty of room to go to the upside, but now you need to work the order a little bit. All right. FTCH, a little bit better price action right now. This is the first time it's breaking through that level. Above 65 is where the risk is. So as long as it's above 65, you're okay. Starting to look for at least a $10 to $12 move through there, again, for the next swing trade. Microsoft earnings came out. We looked, and yesterday we had a 243 buy stop on the trade. Waited till later in the afternoon. We didn't want to get involved early in the morning. Some of these stocks have been hitting and pulling back. You kind of get shaken out. So we waited, had a price above where we wanted to get involved, and slightly in our favor right now, but we have a good risk profile in that as well. Some of the energy stocks perked up yesterday, FANG and MPC in the list as well for today. First time well bid going through those levels, so this would be pretty close to the optimal entry there as well. And that's the list we have today. Other than that, we have earnings today after the close in Snap, Peloton, and Pinterest. So Pinterest has actually traded pretty well recently too. A lot of members of the community starting to get involved in the stock. It doesn't move that fast. It would bore me out of my mind because I'm looking for the next move. I'm looking for the next move. But everybody has their personal styles of trading, so that's okay. Nobody has to trade more volatility. You have to trade what you're comfortable with. So the biggest takeaway from today's video is if you want to see your account grow month after month after month, if the market's tough, you got to scale back a little bit and be okay with that. If you get stopped out, you got to be okay with that. Remember, having losing trades is a part of what we do. Okay, it's an acceptable part of what we do. So don't drive yourself crazy. It's really the winning trades that you should be spending more time focusing on. Because if we accept the fact that 3 to 1 as a minimum, that means we're accepting the fact that there's going to be one. That it means that in the risk reward equation, we're okay with having losses. That's fine. That's a part of what we do. And don't beat yourself up. It doesn't matter if it's 3 in a row. It doesn't matter if it's 2 in a row. It's the 1 or 2 big winners for the week that you didn't hold on to. Those are what we should be working on together. Those are the ones that really matter. All right. Hopefully you subscribe to the channel. I would really appreciate that. If you have any questions about any of these stocks, please leave a comment below. I'd love to hear from you, and have a great day trading. I'll speak to you soon.